The new IG trading platform, fewer clicks, flexible layouts and time-saving settings, split charts across multiple timeframes and discover price change alerts, orders to part close, an integrated Twitter feed and more. Try IG trading now at IG.com.
Good morning, I'm Chris Beach and welcome to Charting the Markets on IG Live. We have a bit of a bounce in progress across European indices this morning, trying to take out the highs from earlier in the week and play catch up with their US brethren, which have been hitting record highs within the past week. We've had further hopes that US tax reform will be signed into law before the end of the year. That is giving the US dollar a bit of a boost. As a result, you've got a weaker pound and a weaker euro. The pound's weakness, of course, exacerbated by the constant will they, won't they, over the Brexit negotiations. Not sure if we'll get any progress today. There's talk that Ireland stands ready to continue to honour the agreement that almost got signed on Monday. But the big question, of course, is what will the DUP do? They are loving the attention on this. Not sure that will get anywhere further today. If it does, you could expect some upside for sterling. You have a speech from Mario Draghi later in the session, and today, of course, we get US initial jobless claims as usual. That's your middle course between ADP numbers yesterday, which came in at 190,000, and of course, non-farm payrolls tomorrow. Let's start with the FTSE 100 this morning, currently trading at 73.55, and on this time frame, you can see how we've been steadily trending lower since the highs in early November, up towards 7,600. Rallies have been sold since then. The problem for the index now is not only is it stuck in consolidation over the past 3 or 4 days, if we go to an hourly chart, we can see that just a bit more clearly, but it's also unable to get above the top end of this range. So you can see how range trading's done quite nicely over the past few days, or so indeed since last Friday, up towards 73.60, 73.70, back down again towards 72.90 and then back up again. This could be playing out once again. It would not be surprising, I suspect, to see this kind of bearish movement, or at least in the very, very short term, in this trading range at least. We are stuck in consolidation. It is December. We do expect higher price of equities in due course, but you can see that indeed from the client sentiment, which currently is 50% long, 50% short, things are evenly poised at this point. If we get a push above 73.70 and the buyers manage to take over, it is this downtrend line from that November high that we need to break. If we move back to the 4-hourly chart there, you can just, if I highlight it a bit more, this is the area we're watching for, and that requires a move above 74.20 to break that trend line. Of course, to create a new higher high, as per normal uptrends, we need to see it above 74.70. So there's a lot of heavy lifting for this index to do yet to really shake itself from its autumn torpor. We've seen the index continuing to drop, not to new record lows, of course, but to new multi-month lows. And the buyers just unable to get this one to hold its ground. Sterling strength, of course, doing a lot to weigh on the FTSE over the past month or so. That has yet to turn around meaningfully, even though we do have a slightly weaker pound this morning. So we're watching 73.60 as your one to watch on the upside. And if it does start to turn lower, then the bottom end of this range down towards 72.95 is the next area to watch if we get some support coming through. And then below that, you've got 72.60 and then the September low at 71.95. German DAX also doing its best to rally this morning, helped by weakness in the euro. But again, it's another range trade problem here. And again, it's worth flagging up the client sentiment, 51% there long, still very evenly split on where this goes next. We turn to the 4-hourly chart. You can see how over almost a month now, the index has been stuck broadly in a very, very tight range, up to about 13,200. Back down again. Indeed, even 13,100 has been a major stumbling block for this index over the past month. It needs to get back above that and get back above 13,200 to really suggest that we've seen a break of the range and that we're headed back to those all-time highs from earlier in November. Otherwise, if it does turn lower, we're headed back towards the all-important support, 12,844. If you're wondering how to trade this, you could argue we're waiting for it to push back towards 13,200 13,200, and then you've got the potential for a possible short trade if you think the range will resume, and then you put your stop somewhere above here, 13,240 or so, just to give it some room to breathe, and expecting it to drop down again, because that would give you a nice risk to reward of about 40 points risk with a potential 300-point reward. That's not a bad dynamic at all. Otherwise, if you get a close above here on the 4-hourly chart, that's a good sign. Ideally, you'd like to see a close above it on the daily chart as well, just to reinforce the strength to open the way up towards 13,000, well, just above 13,500. If 12,844 goes, it's not the end of the world for the longs, but it will be a bit tough. 12,678, the next real one to watch out for. So this trading range very much still in effect, no real change at the moment, but you can see if you've been one of those people playing the range and picking up at the bottom, you could have bought it quite nicely down around 12,860 potentially, with the expectation for it to move back towards 13,200. So that's how you'd play this one at the moment. If you're looking at this on something like a 4-hourly chart, it's one idea, one way to do this, within the context, of course, it must be said yet again, of a much longer term uptrend that has seen the index hit record highs within the past month. Signs of life within the S&P 500 as well, after one of those little pullbacks that gets everyone nice and bearish in the short term. You can see the record high from Monday's session, or over the course of Monday, down towards the low of Wednesday. That's a grand total of 1.7% decline. This is almost a bear market, but of course it's barely shaken the index. We now find ourselves holding nicely above this 50-period moving average, and really now we're just looking for, can it go back towards 2660, and this zone we saw, and indeed that all-time high 2665. The problem for the bears, of course, as we've been saying all year, is that there's so much support from this point downwards, down towards 2600 itself, 2597, 2583. The list goes on. Of course, this is a buyer's market. It's a dip buyer's market. And you can see stochastics nicely oversold over the course of the last 24 hours or so. And just if you look back what happened the last time it was down here, just looking at this indicator, this is the way to go, of course. It's a rising trend in almost every time frame. The 3 moving averages in this 4-hourly time frame working out quite nicely. The last time stochastics was down there 2564, and then we saw the index gain, well, from trough up towards peak about 4%. So that would be quite an impressive recovery. But December, of course, as I keep saying, as I will keep saying, it's a very strong month for equities. It's also a very quiet month in terms of volatility. You've had a bit of downside volatility, just the shakeout at the beginning of the month. Not surprising to see people just pushing that index lower after its gap higher on Monday, but now it does look, for the time being, as if the buyers are reasserting control. So if you're looking to short this one, it's probably the chance that it's been and gone now, unless it does drop back below that 50-period moving average. If it does go back through 2630, I think it very much looks like we will just see another push into year end. So in FX markets, the revival of the US dollar is actually pushing down the pound and the euro, and that, of course, as we were looking a minute ago, gives the European stock market some degree of strength. The euro against the US dollar currently trading at 117.80, and I think it's relatively significant that you've seen it drop below this key zone of resistance. If we look at this, these areas, these levels here, previously support, now becoming resistance once again. They dominated, if you remember, during the middle half of October, that nice sequence of lower highs coming through there. Potentially that's developing once again. Now be very careful, as some people would say, never trust a trend line, because this one's quite steep, but you certainly do have a potential sequence, a new lower high coming through there from the highs up on the 27th of November, nearly 120 against the US dollar. This is continuing to move lower from the looks of it, and I suggest your next target to look for in terms of support is that 117 area around the lows on the 19th and 21st of November. Below that then you've got 116.62 and then down to 115.74. The broad direction of travel for this index, if we went to an hourly chart, might be more effective, is certainly to say this is the kind of movement we're expecting. And at the moment, this nice sequence of excuse me, lower highs and lower lows continues to reign supreme where the euro is concerned. So watch out for this one. If we look watching it, this is the kind of trend line we expect. And you've actually got something of a channel as well coming into play to some degree. more or less. You can see these directions coming through. Perhaps we'll see it down towards 117.58. So euro dollar continuing to track lower for the time being. The pound, of course, still stuck, waiting to see whether there'll be any resolution of the Brexit impasse over the course of this week. And again, downtrend in this time frame, dollar strength really beginning to weigh on this one. And I think, of course, if you're using price action as your main guide, which of course it always should be, you have seen over the course of the last hour this spike higher for cable up towards 134.20, and now it looks as if the sellers are coming back in again. So if you watch there, you are seeing potentially the creation of a new lower high there. You've seen lower lows coming through since we topped out at 135 at the end of last week. My suspicion is that even if we do get a Brexit deal, a lot of it's already in the price. You've seen that big run up in sterling over the course of the last couple of weeks of November, indeed all the way through November itself. And I think a lot of people now assume there'll be a deal of something that will get us into the next phase of talk. So I'm wary about suggesting that you would see a big bounce in cable and euro sterling on the back of this, or rather a big drop in euro sterling, sorry. I think it's already in the market, the news really. The expectation will just be a giant shrug of the shoulders, a classic buy the rumour, sell the fact. I could be wrong on that, but it seems to be the way things are going. You didn't get that much of a bounce into Monday, and it certainly then continued to drift lower. And then also dollar yen is your one to watch because it really has revived over the last few hours. We were looking at it yesterday down towards 112, and certainly it's come storming back again all the way through. The big one to watch now is this one. This downtrend line from those highs in November, if that is broken, we'd need to see it really pushing above 113. And again, this 113.09 zone, the highs from the beginning of the week, if it clears that, that puts us in with a chance of trying to make another meaningful stab at getting towards 114.37, that all-important peak from November, which goes back all the way into the year as well. It looks as if the buyers are in charge for the time being here. So it could be one where intraday dips continue to be bought. You can certainly see their nice bounce off the 50-period moving average, moving back above the 100. Everything seems to be moving back in the direction, at least, of this trend line. If it closes back above there, there's a lot to argue that actually we'll see further gains for the dollar. Finally, commodity markets. Gold has suffered 3 consecutive days of losses, and now we are seeing it pushing towards 4-month lows, really. Crucially, this 1264 level has now been broken. It was very, very important all the way through October and into November. We were watching it very closely. The number of times it did try and bounce. You've got to hand it to gold. It worked so hard to try and rally upwards towards $1,300, and now, again, the US dollar reigns supreme and is knocking it back. So with a loss of 1264, we've opened below it. It looks as if, barring some remarkable turnaround, we'll close below it today, although there's still quite a bit of the session left, obviously. We're looking at moving back towards 1245 and 1240 in the short term, and then we're really beginning to eye up levels down towards 1214 and indeed 1204. Those are the lows are from July. It looks as if we do have quite a bit of a downtrend coming into play from the highs of September, which means you could see a rally all the way back towards 1285, 1286, and it would still be in a downtrend. There's a lot of downside momentum. You can see there just as we talk gold pushing down once more. So it looks as if the sellers are in control on this one. Really, it needs a daily close above 1300 to reverse that particularly negative outlook. And then finally, turning to US crude oil. Not quite so affected by US dollar strength. We had a bit of a knockback yesterday, and it really is stuck in this range now. We've been rallying so hard for the last 6 months or so. Hit $59, dropped back towards this key support at $55.67, a bit more as well at $55 itself. So watch the break of those levels for the time being to see if that really starts to gather some momentum to the downside. The uptrend is still there. Really, we left our trend line behind quite a long time ago, all the way back in August. We could return to it, I suppose, see it go back towards $51. That would be a bit of a shakeout, really. So be prepared for that kind of move. But for the moment, if 55.67 were to hold, we would then look to see if it can go back towards $59. And then, as I've said before, you're going back to a 2015 high at $62.56. So we have US initial jobless claims at 1:30 today as normal, and Mario Draghi speaking this afternoon. Otherwise, really, we're beginning to shift towards non-farm payrolls tomorrow, which come out at their usual time of 1:30. That's it for me. Thank you for joining us, and we will see you again tomorrow at 10:30.
The new IG trading platform, fewer clicks, flexible layouts and time-saving settings, split charts across multiple time frames and discover price change alerts, orders to part close, an integrated Twitter feed and more. Try IG trading now at IG.com.